Hello, good morning, good afternoon, and good evening to today's audience. It's a pleasure to welcome you all here today, and we will be doing a live stream over the next 30 minutes, looking a little deeper at Luxembourg. And the title of today's discussion is The Inside Track on Luxembourg's fund ecosystem, key features and trends. And very much looking forward to hosting this today. My name is James Williams, the Editor-in-Chief at Private Equity Wire. And joining me today, I'm delighted to introduce Barbara Martin, Global Commercial Director of Funds at Intertrust Group. Good afternoon, Barbara.
Hello, everyone. So I'm Global Commercial Director of Funds for Intertrust Group. I'm based in Luxembourg. I sell end-to-end services for funds in several jurisdictions, but with the key focus in Luxembourg.
Thank you very much, Barbara. Joining us as well is Gilles Doucement. Gilles is a partner in the private equity and real estate practice of the law firm Arendt and Medenac, and delighted to see you, Gilles, this afternoon.
Thank you, James, and hello, everyone. So my practice consists in fund formation with international and global fundraisers, and that goes together with some regulatory expertise managing the European complexity.
Thank you very much. And also joining us, we have Stefan Pesch. Stefan is the CEO of the Luxembourg Private Equity and Venture Capital Association, and delighted to have Stefan on board as well.
Hi, James. Hi, everyone. Thanks for having me. And you just said it. So I'm the CEO of the Luxembourgish Trade Association specialized in private equity and venture capital. We just had our 10 years anniversary last year, and we have many, many more projects coming up.
Excellent, Stefan. Thank you. I'd like to encourage the audience over the course of the next 30 minutes or so to field any questions that they may have that they would like the panel to respond to. We will have time at the end to field 2 or 3 questions, so please do feel encouraged to do that. And I'm going to kick off by trying to get a broad insight, really, to set the scene on Luxembourg. And Stefan, I'll start with you. What are US and maybe APAC Pacific managers looking at when they consider Europe and more specifically Luxembourg from your perspective there?
Yes, so James, just wanted to share with you that Luxembourg is really an international gateway and the PEVC hub for US or Asian managers who would like to fundraise in the EU, also benefit from the EU passport, and certainly use the well-recognized structures which fit normally the LP's needs and expectations. Luxembourg's success is certainly not new, since it already started, in 1988 with the UCITS funds. Those are the liquid funds investing also in transferable securities. During the 2000 decade, Luxembourg added some dedicated structures to its toolbox, for example, facilitating investments in risk capital, and also access to more alternative investment strategies, respectively via the CCAR and CIF. But since the AFMD implementation in 2013, which happened after the global financial crisis, Luxembourg has really not fallen asleep. We believed in the rise of private capital and upgraded our business models, new tools, vehicles, for example, which accelerated the growth of our hub. And we used then, as an example, the refurbishment of the limited partnership laws, the development of new depository capacities, and the rise of AFM solutions and services. Finally, also the launch of the RAVE, the Reserved Alternative Investment Fund, in 2016 also proposes new smart structuring possibilities and very efficient time to market. I think Gilles will talk more about it afterwards. Luxembourg, surely also a famous back office in the 90s and 2000s, has continuously evolved over the last decade. And we propose really more value and really robust local substance. Important middle office functions have also come to Luxembourg and are directly proposed in and from Luxembourg, including risk management and valuations, fundraising also. already working on the next step, and an increasing number of deal persons and experts already looking at Luxembourg or checking who is present and really thinking of what could be proposed in the near future. I mean, this is really a thriving and competitive industry, but with lots of energy. And the service providers and experts, for example, like Barbara and Jill, they are able to propose all you need in an easy fashion. If you require the famous one-stop shop, you know, the admin, depot services, and AFM, or best-in-class advice concerning structuring, deals, and tax aspects, you will surely not be disappointed here in Luxembourg. Just as a last hint before I pass over, the biggest US GPs and PE houses, they all have opted for Luxembourg, including some of our close members, you know, like Blackstone, Carlyle, Bain Capital, Oaktree, Apollo, TPG, Warburg Pincus, Lone Star, and many, many more. So honestly, no need to add anything and to say more. Luxembourg is really a great place for you to join us.
Yeah, well, very well said, Stefan. Thanks for really giving us that initial insight. And I'll invite Barbara and Gilles to maybe just add a quick perspective from each of you in terms of what you've been maybe seeing over the last 12 or 24 months, again, in relation to your non-European clients. Barbara, is there anything that you would point out, as I say, over the last 12 months?
Yes, I would say that both US and Asian clients have understood the importance for a clear strategy when it comes to choosing a jurisdiction to set up their funds and which investors they want to target. We have also seen an uptick in choosing the AFM to have the EU marketing passport. They also have understood the interest of EU investors in private credit, which has definitely been positive, while the most conservative investors are still sticking to real estate.
And I should add that we've seen mostly private equity and VC funds. They have been very active, but debt funds in all shapes and forms have really taken the lion's share. Now, when it comes to the US market, the managers that had been here already have gone deeper and have basically also in the connection with Brexit have set up more of their activities in Luxembourg and in other European member states. And so, but we're also seeing new US managers entering the market.
Well, that's very encouraging, and I think certainly on the private credit side especially, it does feel as though there's a lot of momentum building in Europe there, and Luxembourg is very well placed in that regard. Jill, I'll stick with you to get the unenviable task of giving a high-level assessment, if you could, of Luxembourg's legal regulatory regime. Certainly for those non-EU managers who are looking to raise assets and deploy assets across Europe, what would be your summary perspective of really what Luxembourg kind of offer to non-EU managers?
So it's a summary because there is so much complexity that it's rather difficult to wrap it up in a couple of sentences. So as a reminder, US managers can go into Europe to raise capital one of two ways. So from the outside first. So you can privately place a US or Delaware or Cayman fund with European investors. You need to follow a country by country approach under national private placement rules. However, every country will have slightly different requirements to allow you in, from a simple notification to a more complex authorization, and some countries not allowing you in at all. So the process can be efficient if the scope is limited. If the strategy, however, is more ambitious, US managers will typically go inside the EU. So from within, so this would mean that you set up a fund domiciled and administered typically in Luxembourg, appointing a Luxembourg management company. Some US managers and quite a few US managers have set up their own management company. But let's say what we see today is new US sponsors and promoters coming into the EU. They will look at Luxembourg funds and Luxembourg management solutions. So and these the interaction then between that Luxembourg fund and management company will then either be structured by some kind of portfolio management delegation or advice. And this option really allows US managers to be on equal footing with EU managers. So under the first option, you will have to run a prior mapping exercise, though, in order to find out whether you can actually reach a sufficient number of investors in the countries of choice. If the outcome of that analysis is uncertain, or if the manager has a more ambitious fundraising strategy, you will have to go into the market from within. So we're actually no longer referring, or specifically referring to the third option, which relies upon reverse solicitation, since this remains available generally. There are a few more conditions these days, and especially since the summer, and there is additional scrutiny and rules to be complied with. So we will never mention reverse solicitation as a strategy, but one should bear it in mind. It may be useful. So Luxembourg has become the preferred EU member state to access the entire EU market, and it is therefore often quoted as the Delaware of Europe, which is a direct reference to its toolbox of legislative solutions and its highly respected and accepted corporate law and fund product laws. And so we have seen that over the last 30 years, and where, as Stefan mentioned, Lux has emerged as Europe's main investment management hub. So that's why, when it comes to fundraising, US managers can go inside, they can set up their own, but they can also opt for turnkey solutions that will enable them to access all EU 27 target markets. It is important to understand that this turnkey solution, however, applies to investors qualifying as professional investors only, institutional investors. If the strategy includes retail investor access, Luxembourg law will again provide different product solutions, although it needs to be said that retail investor access comes with additional strings attached and limitations. So to be discussed in more detail, but again, solutions are available.
Yeah, a very, very well explained. And I think, as you say, the Delaware of Europe is a very nice way of thinking of Luxembourg. And just to remind the audience, do field any questions, please. We would encourage to get the panel to respond specifically to anything you would like answered. So please do put together a question if you would like to. Gilles, one last point to really dive into with you is to give the audience a little insight again into just what the key fund structuring options are. I know that Stefan referred very briefly to the RAIF, but for PE firms, what are the key tools in that toolbox, would you say?
Okay, I can go nowhere close to the bottom, but I'll try to be as precise as possible, and maybe to go in from a high level. Typically, when we talk about the laws governing asset management activities at large within the EU, they are based on EU directives and regulations. Like in the US context, you would maybe look at federal law. However, when you look at the products, the funds themselves, they are typically subject and governed by local laws, national laws, like state laws in the United States. And so when you look at Europe, there is some complexity because you have this kind of European overarching regulatory framework, and then you have some local law specificities. And it's on the products that Luxembourg has played a key role over the last 30 years, and where the Delaware reference comes from, because all the product laws together form our structuring toolbox, which is really standing out in the entire EU regulatory landscape. And so if you add thereto that Luxembourg is a multicultural and multilinguistic financial center, it is quite important to know that the fund documentation, and it's a very simple information, can be drawn up in English, German, French, to mention only these. And so there's a practical and pragmatic approach. Now, looking at the available fund structures, there is no one size fits it all. But the toolbox contains, again, the solutions, be it for regional, international, global fund structures, for feeder, master, umbrella, or parallel fund structures, and be they for institutional, professional, retail distribution. So basically, you cover it all, but you need to pick and choose the right legal regime and form to go into the market. We would generally now also distinguish between fund products that are subject to prudential authorization and supervision. This is typically the case for all funds that are designed for retail or quasi-retail distribution. These are specialized investment funds, investment companies in risk capital, and part two undertakings for collective investment. And over the years, and in particular, I mean, this goes back to 1988, 2004, 2007. So it's where the toolbox has been enlarged. And the other fund products are indirectly supervised through the appointed management company, be it in Lux or outside of Lux. And on the one hand, there you have the limited partnerships regimes, which are kind of the smallest common denominator and the European gold standard when it comes to structuring private equity funds, debt funds, real estate funds, but as well as the reserved alternative investment fund regime, the RAIF, which allows for both partnership and corporate forms, and which also provides for many different structuring features, such as, for example, protected cells. So last but not least, all Lux funds are organized so as to be either fiscally neutral, if not also fiscally transparent. And so that all of that translates into Lux having become the largest asset management hub, and so being recognized for the legal and corporate system that are available.
Yeah, thank you very much, Gilles. It's hard to condense an awful lot of information, but that's a great job there. And Barbara, I wonder whether you're seeing, from your vantage point, any particular trends in terms of what you're seeing from a structuring perspective. Are you seeing your clients favour any of those structures that Gilles just referred to?
Yes, I do. So the SSP is still one of the favorites because it's, of course, quicker to set up. We're talking about 4 to 5 weeks. The fund can be set up. Also, you have the advantage that you can make use of reverse solicitation, even though I see that less and less these days. And I believe it's a trend that will continue to go down in the next few years now with the pre-marketing, because you have the rule that, for instance, if you set up your first fund and you do the pre-marketing for the next 18 months, if the same investors want to go into a second fund, for instance, that's still considered as marketing. You cannot use reverse solicitation in that case. So there are different rules now, guidelines, but having said that, they still make use also of the AFM, because again, it's the possibility to have the access to the marketing passport, which is important. I also see a second favorite, which is the RAIF, because it allows for diversification, so consisting in an umbrella fund with multiple compartments, each with the specific investment policy, cost structure, and distribution policy.
That's a very interesting, and both of those, Barbara, the RAIF and the SESP, managers can avail of the third party manager, which for non-EU managers is a new concept. It's not one that exists in the US or in Asia Pacific. Could you briefly highlight a couple of the advantages to appointing a third party AFM?
Yes, of course. I think one of the advantages, for instance, the SCSP, if you're under the 500 million threshold, you do not need an AFM. But of course, the access to the EU marketing passport is of interest, because you have access to EU investors. You can market your fund, the regulatory expertise, the assistance with heavy lifting, allowing fund managers to focus on their core skills of capital raising, deal sourcing. So this is more efficient for them.
Yeah, absolutely. And Gilles, I wonder briefly if you would, are there any misconceptions maybe in terms of appointing a third-party AFM? Anything that again the audience maybe should be aware of that to assuage any concerns? Gilles, are you on mute?
No, can you hear me?
Oh, yes, yes.
Okay, sorry. So I think it's important to say that the appointment of a third-party AFM is the creation of a trust relationship, and that will have to be framed contractually so as to ensure that the rights and obligation of both parties are clarified and protected, because you are in a regulated space. So, and it's all about investor protection. It's about creating the European market around asset management. So therefore, whenever a US manager is entering into such a relationship with a Luxembourg-based AIFM, there are certain rules that need to be complied with, because there is a liability regime that needs to be managed carefully. And so one of the misconceptions initially was that, such an AIFM will just basically rubber stamp whatever needs to be done, and then the US manager can freely go into the European market and distribute the funds. And that is a misconception in itself, because Europe, while the AIFM to be appointed will basically trigger the marketing passport, or now allow you to trigger the right to pre-market your product, to test your product in the European market, that is not a free ticket to basically go in and do whatever you wish to do as a US manager. So the appointed AFM will have to work hand in hand actually with the manager in the US, designing a distribution strategy, a marketing strategy, or even a pre-marketing strategy that is in line with the rules in the different EU target member states where distribution is meant to be deployed in a second stage, and that typically requires some time to understand and to draw up and to prepare. So therefore, I would say AIFMs today, I mean, when the regulatory framework was implemented in 2013, it was new for everyone, and over the last 8 years, AIFMs have gone to master complexity and also evolving complexity, because, for example, the framework around pre-marketing is new from this summer. So it's only since 2nd of August this year that managers need to notify that they wish to pre-market a certain fund within an EU member state. Pre-marketing here meaning testing an idea, testing a strategy. It's not going around with documents of anything like that, but of course you can. But it's about really testing the market. Is there appetite? And US managers typically know that this is a key step. And so AIFMs will allow and can allow US managers also to do just that. Test the idea before the entire marketing passport gets switched on.
Excellent. Thank you very much, Gilles. That's very, very good to get that across. Barbara, there is certainly another key area that managers will want to be aware of, and that is to what extent ESG is rising to prominence in Europe, but more particularly in Luxembourg. Could you just bring us up to speed with what you're seeing in that regard?
Yes, I think globally and in Luxembourg, PE is the most common asset class in the impact investing industry. And I think ESG mandates are still mainly driven by institutional investors. For private markets, the scarcity of data is still a key challenge. It's difficult to gather the data, to manage the data. So also the lack of standardization proves to be a burden for managers, operational burden for managers. Also, the additional due diligence requests and customized reporting that will be requested and to be provided to prospective investors is at play. So I think also with regards to the new regulations, in order to comply with them, the data management and reporting is absolutely key. But there is an uptick, and it's going to grow in the next few years.
Yeah, still a lot to work out, but
a lot to be done.
A lot to be done. Stefan, do you see ESG as a promising field, and I just wonder what your members are perhaps asking?
Completely. I first also really acknowledge what Barbara shared. I mean, it's certainly not easy, but we consider really sustainable finance, ESG criteria implementation really as nearly the future of finance. So it's certainly hard, it's complex, not everything is clear. It will require time, money, and certainly well-made brains. But in the end, the outcome will bring lots of positive outcomes and opportunities, be it on the risk mitigation side, being it also on the non-financial added value. So I think it's a bit like the AFMD in 2013. Everybody was kind of a little bit shocked or was not really sure about it. And in the end, once the implementation was done, it brought, as I mentioned before, either new structures or new models. So you can always see it like a half full glass, sorry. But here I think once we have worked out those different obstacles, it will bring a lot. So
Sure.
I would say, yes, this is very important, will play a very important role.
And also, Stefan, just for a couple of minutes, just want to bring the audience's awareness to the fact that Luxembourg is a very well-established fintech hub as well. And I'd love to know a little bit about what you're seeing, again, with some of the innovations that are in Luxembourg and why some of the global corporations like PayPal, Amazon have all opted to set up offices there. I mean, that's an exciting area for the jurisdiction as well.
For sure, I cannot agree more. I mean, just as a reminder, the LPA's mission is really to represent, promote, and defend the interests first of our PVC industries and also of our members. You know, and our members, they are really a majority of GPs, LPs, and family offices. On the tech side, you know, we are very happy to interact and work with those historical, quite successful VCs, investors, and certainly the upcoming next gen. And in order to potentially attract new VCs to Luxembourg, which is also very important for us, I think more investors and surely high quality local startups are key and are also needed. So we can also work on those triggers, for example. And therefore, I mean, the LPA nurtures those partnerships with, for example, incubators or accelerators, including our friends from Loft. You know, they are the incubator specialized in fintechs, or Lux Innovation. They support investments innovation in Luxembourg via public-private programs and their startup platform, which is quite new. So we also have the House of Startups, Technoport, and some other ones, you know. So it's really a thriving sector too. Lots of players who can bring really a lot of value. And it's a bit that combination which will bring the right formula, and which then also brought us to that very positive result you were mentioning, to have even GAFAM companies here in Luxembourg with headquarters who found the place really attractive because we had also the capacity, high performance computing, the right networks, also the economical and tax stability, you know, to be able to provide a great place where you can be business friendly and again international. So it's the gateway, it's the hub part. And in a nutshell, you know, back to the incubators, they attract the talents, the entrepreneurs, founders, startups, whatever you want. And we help as LPA to complete that ecosystem, you know, with joint events, common networking, pitches, and fundraising possibilities. We'll have our flagship conference end of October, and that will also be really on tech and innovation. So really tech is in the center of the game, and you cannot avoid it for sure. And Luxembourg, the financial sector, you know, with that long history, has shown a natural focus and special interest in financial, regulatory, and operational matters. And this is the reason why, for example, if we focus on the fintech sector, fintech, that represents, you know, a tremendous opportunity for our future, for our economy too. And let's not forget, we just mentioned, you asked that great question, ESG solutions. What about that? In our eyes, once you have implemented that great tech and you have the right persons around the table, that could become the new kid in town.
Yeah, absolutely. We do have, we're down to the last minute, and we will field a few questions that we've had, so thank you to the audience. But I just would like to give Barbara and Jill just the final word really on what they think are maybe two or three of the key things really that any GP ought to know about Luxembourg. This is Barbara, what maybe not three, but one or two key features that you would just draw upon, just as a last kind of thought from you, and then I'll go to Jill.
Yes, so I would say the Luxembourg toolbox the expertise, the long-standing financial stability of the country, and also the regulatory expertise. And I'm sure Gilles can add to that.
Yes, I mean, look, I'm a lawyer, so what I say is that everybody's using Luxembourg law within the EU, just like Delaware law is being used across the US. So that's something that is very well established. And be it the gateway, be it the toolbox, there is a solution which will allow US managers to go the extra mile, so to reach the fundraising targets that they have set for themselves.
Well, that's fantastic. We got there within 30. We're just on 31 minutes, so that's a fantastic effort to my panel. We've had to zip around an awful lot there, but that was superb. Thank you so much for that. Now, let's just spend the last 4 or 5 minutes just taking a few of these questions just to conclude. And I think maybe the first question. Does the hybrid fund have scope in the future?
Okay,
Gilles, Barbara,
I can take that probably if I understand it correctly. If my understanding is correct, a hybrid fund could be one that is suitable both for, let's say, professional, institutional investor distribution as well as for retail distribution. And there is, let's say, as I said before, when you go for retail distribution within the EU, there are additional strings attached. Now, it happens so that there are 2 regimes within the EU, the LTIF regime, so European long-term funds. So the LTIF regime and European venture capital funds, for example, that allow you to target both retail and non-retail, meaning institutional. And while these regimes have been relatively, let's say, under the radar screen, their time may just be right, and there will be an LTIF reform that is coming up. I mean, there are some 15 LTIFs in the market, but many more UVECAs, of course. But there is a European review coming up on LTIFs, which is to be presented within short, and that will really fix a few things that in the current regulation maybe do not work that well. And we expect that regime to really take off significantly after that. And there has been over the last year or so quite some also manager interest in that product, because it allows you to basically go across the EU for private equity, for credit funds, etc., for infrastructure. So it's a very good solution. And we'll have to see. There's a reform coming up in that respect.
Okay, well, that's super helpful. We have another question from Kyle. And yes, this question here on any thoughts on AFMD2. I think it's inevitable. Barbara, Gilles, Stefan.
If you allow, I can take it. So together with LPA, so we have been participating in the let's say the review process, because this directive is coming up for review. Should have been reviewed already some time ago. Now, it's a difficult topic. What we know is that the changes should be minimal, because the framework actually works quite well. However, there are a number of topics like delegation, maybe like no, it's mostly delegation, substance, and a few other rules around distribution that will come up for review. We will only find out in November when the proposals will be tabled, but there has been intense lobbying over the last couple of years around this topic, because it is crucial to the entire European asset management industry. The current framework works quite well, and so that's why the industry is expecting changes to be minimal. And from what we hear and from what we know, so far the changes that might be put forward can be managed by the industry within the EU and also from the outside.
I'm sure managers will be very relieved to hear that.
Well, let's wait until it comes out.
We'll wait and see. Wait and see.
We're certainly huge fans of the smartest possible changes. So also smooth and which makes sense. So let's not now change a good system which has proven right and Just for your information, Jill is also ambassador at Invest Europe, and there the LPA and some other sister associations participate to different consultations and will certainly follow the topic.
Sure. Yeah. Absolutely. Absolutely. Are we able to field one more question, or have we run out of time? Oh gosh. Well, that's another technical question.
Jill, it's your day.
I don't know how you're able to answer that in a short time, Jill, but anything on cross-border distribution?
Cross-border distribution. Well, let's say cross-border distribution, there is, in principle, Europe remains open. So when we talk about pre-marketing, the European framework says, and the European institutions, legislator wanted the rules to be on, and the managers to be on equal footing. So pre-marketing rules apply to European managers, pre-marketing rules also apply to non-European managers. Now, when it comes to marketing, however, so that is for pre-marketing, testing the market. When it comes to marketing, however, there's a big difference, because the marketing passport only works within the EU. And while there was a system designed to also work for non-European managers from outside to give them also a marketing passport, that process or that concept may have died. So when I say may have died together with Brexit happening. And so and when I said before, AIFMD2 may potentially say that the passport will only exist within the EU and not from outside. That means that no, there is no equal treatment there, and US managers wanting to go full steam into the EU, they will need to set up within and go from within, as explained before.
Well, thank you very much, Jill, for fielding that question. I know all of them, in fact. You've done it. That's a fantastic. I'm really glad that we've had some great questions from the audience, actually. So thank you so much for that. I would like to field more, but we are just about running out of time here. I would like to just let the audience know that if you go to the Intertrust's LinkedIn event page on which this event was hosted, and also to the Intertrust group website, you will be able to keep in touch, maybe reach out to each of our today's respective speakers. So please do feel free to follow up if you would like to. But it remains for me to just say a very big thank you for this lightning appraisal of Luxembourg. Barbara, great to have you on board. Stefan, great to see you. And Jill, again, fantastic to have you on board today, and thank you all so much. And would just like to say thank you to the audience, and hope you found that helpful. But look forward to keeping in touch with you all, and all the best for the rest of the year. Thank you, everybody, and good luck.
Thank you.
Thanks a lot.
Thank you.
Bye.